Well, I recently spoke to ECIC Senior Economist Tsidiso Disenyana on the impact of the Tripartite FTA on cross-border trade.
Mandate or the route is towards a more continental FTA, that is your African Economic Community, and the Tripartite FTA is just one of those building blocks towards that. And from a trade point of view, I believe in the short term the impact won't be that much because most of the countries, about 26 of those, they have to harmonize their trade programs, meaning that they have to normalize their tariffs arrangements. That's going to be a very hard sell going forward. But the real opportunities, especially for business people in the continent, would be more on infrastructure programs. And in that regard, we have cross-border ones in terms of the North-South corridor, where South Africa does participate. And of recent, within the ECIC, we've had inquiries on the Nacala development corridor. Both projects entail multimodal construction of transportation network, be it rail, road, and also maritime, including the shipping lines of those 26 member countries.
You do mention that you see opportunities opening up more in infrastructure, which could enhance trade, but are there any other sectors that are ripe for investment at the moment?
I would say beyond the extractive industries, there's lots of opportunities, especially in the services economy. In here, we're talking about financial services, transportation services themselves, and also there's plenty of opportunities beyond services on consumer-related industries, simply because of the increasing demographic dividend in the African economy.
What about painting a picture for us regarding the changing dynamics in the macroeconomic landscape of Africa? Is this providing an opportunity for ECIC?
Well, the ECIC sees opportunities, especially in uncharted territories. And to the extent that the dynamics of recent have been going down, for us, the focus is not really in the short term head of the African economies. We look at projects from a medium to a very long term. And in that regard, whenever we put our lenses to enter into specific projects, we don't necessarily look at the impact maybe 2016 and 2017. Most of our projects that we participate in, they range from about 5 years to about 10 years. So we're putting in those medium to long-term lenses. And there, the ECIC, through its risk mitigation strategies, can be able to de-risk some of these projects going forward.
How then does underwriting in the African context differ to what our international counterparts do?
I would say it doesn't differ that much. I think from an ECIC perspective, it's just that because of our proximity to the African continent, we've been able to go out there, meet with governments, and understand the real issues on the ground. Whereas, of recent, some of the export credit agencies, they've been coming to South Africa and using South Africa as a gateway to now get to understand the dynamics of risks in Africa. So we as the ECIC, we are a little bit upfront and forward when it comes to these issues, and we do tend to understand our markets accordingly.
If I can perhaps build up on that question and get an understanding of how receptive African governments have been to these ongoing conversations, because it does seem as though we tend to work in isolation. You have the East African communities, SADC also quite strong, and not forgetting ECOWAS. Are we finding increased integration between these regions?
Yeah, I think with regard to the trilateral FTA, the building block is towards the whole African economic integration. So that's a positive step going forward. But there will be challenges in between, because you have a lot of countries which are part and parcel of this African economic community, and it's really going to be difficult to put those heads together and come up with consensus.
To close off with then, if you have mentioned that, again, the ECIC looks at investments over the long term, 5 to 10 years, but are there particular sectors that you're slightly more cautious on at the moment, which present a significant amount of risk?
Not necessarily. You can find risks across various sectors, but for now we know simply because of the commodity cycle, we tend to look at extractive industries projects in a very different, I would say, lens than with other sectors. Hence, your risk mitigation strategies for those specific sectors have got to be really robust, but also undertaking a due diligence exercise to get to understand the nature of the project on the ground.
That was the ECIC Senior Economist, Tsidiso Disenyana.